You can see that, and also in the last year, 18 months, the central banks throughout Asia have been accumulating gold, real, physical gold. We know which way this was going. This is quite clear. So the gold reserves are there. There is no doubt that when this story breaks, and we're probably beginning to see, in fact, I think we are beginning to see, the price of gold in dollars tending to rise, which basically means the dollar's falling rather than gold rising.
Central banks are the more dominant players in the gold market, given that gold investment funds hold approximately 1.6% of the reserves held by central banks. The IMF estimates that gold represented just 7% of central bank reserves at the end of 2021. Moves to increase these gold holdings make central banks the price setters for gold. For example, large-scale central bank gold buying over the 9 months from Q3 2022 through Q1 2023 amounted to 1,092 tons, or 0.50% of total central bank reserves. Central banks across Asia have accumulated physical gold in the last year and a half, signaling a clear shift in their reserve strategy. They anticipate certain developments and trends in the global financial landscape. Alasdair Macleod, head of research at Gold Money, believes this shift is due to the rising price of gold in dollars, which implies a falling dollar value rather than gold appreciation. As South Africa hosts the 15th Brics Summit in its financial hub, Johannesburg, from August 22nd to 24, the 5 Brics countries, Brazil, Russia, India, China, and South Africa, will discuss establishing sustainable payment mechanisms for mutual trade. The move comes as more and more developing countries seek alternatives to reduce their dependence on the US dollar. Experts said that the dollar, used as a tool for the US to exercise international hegemony, has resulted in significant uncertainty for the recovery of the world economy. According to Macleod, there's a belief that the weakness in the international monetary system is no longer the result of a strong currency increasing the cost of exports from countries like China to the West. Instead, the real threat lies in dismantling the long-standing project between China and Russia, which has been developing over the past 3 decades. This project aims to create a more robust financial system and reduce dependence on the US dollar. Brics nations can balance their government budgets and transition to a gold standard or a currency board arrangement, securing the value of their currencies. This contrasts with Western nations, which may face challenges due to welfare commitments that necessitate continuous money printing and currency devaluation. Macleod believes that the advantages of adopting a gold standard are evident in the case of Russia, where the interest rates and bond yields are much higher than the inflation rate. A gold standard will likely decrease interest and bond rates, providing more stable and favorable economic conditions domestically. Now let's watch excerpts from Alasdair Macleod's interview with As Good as Gold Australia. Be sure to watch the entire video and consider subscribing to our channel. Remember to enable post notifications to stay updated on our latest uploads. Thank you, and enjoy the video.
We've already seen interest rates rise. We see the Fed continuing to raise them, despite the rate of inflation coming down. You can see that from the Chinese point of view, the weakness in the whole system is no longer the effect of a sound currency increasing the price of their exports to Europe, Australia, America, whatever. No, the real threat is the dismantling of this project, which they've been putting together with Russia for the last 30 years. And this is why I think they have indicated that through the new development bank, which is the Brics Bank based in Shanghai, they will make funds available to these countries in order to offset this American action. But equally, they need to consolidate the whole thing to stop the dollar being weaponized against Brics countries, against the Asian sort of landmass and all the rest of it. So all this has come together. Now, there is another feature which I don't think people really understand. And that is that the countries which cannot get out of the fiat currency trap are ourselves. We have welfare commitments which basically can condemn us to printing money continually and debauching our currencies. This is not the case in any of the Brics members. Now, they have mismanaged their currencies, of course, but it is perfectly easy for these countries to balance their government budgets And not only to do that, but if they can do that, then they can go on to some sort of gold standard or currency board arrangement with someone who's already on a gold standard and secure the value of their currencies. And there are also advantages. I mean, if you look at Russia, again, Glaziev said, we've got to go back on a gold standard. In Russia, the Bank of Russia's interest rate is 7.5%. The yield on the 10-year bond is 11.5%. I mean, these are huge levels. The rate of inflation there is less than 3%. I think it's about 2.75%.
Right.
I mean, this is crazy. If the ruble went on to a gold standard, then what would happen is that the interest rates would fall to reflect the soundness of the currency, assuming it's properly backed, credibly backed, which means that interest rates would probably fall, if the British experience of the 19th century is correct, and it is, towards the 3% level, from 7.5% headline, and equally bond rates would come down. So, the prize is far better domestic economic conditions by going on to a gold standard than remaining tied to the West's very fluky and very volatile fiat currencies. So you can see that this is the background to the whole situation. So it's a combination of things. The vested interests within the whole of the Brics organization is A, to stick together, and B, to have sound money in the backbone, if you like, of this organization. And it will be the consolidation of the whole of the Shanghai Cooperation Organization and Brics and those intending to join Brics. They will probably create a new category. They'll say Brics Associates or Dialogue Partners or something. They will all come together under this. Now, the point about this trade currency is that it is actually very easy to set up. Why? Because the general public are not involved. This is a medium, if you like, of exchange, which will exist between a network of central banks.
According to Macleod, there is a need to establish a new central bank whose primary role is to issue and control the relationship between gold and credit of a new currency. The goal is to ensure a strong link between credit created for trade purposes, mostly self-extinguishing, and a top-level currency firmly linked to gold. However, Macleod sees this will be put forth at the upcoming Brics meeting from August 22nd to 24. Macleod emphasizes the stark difference between fiat currency's uncertain value and the consistent purchasing power of gold. He points out how fiat currency can experience sudden collapses in purchasing power due to economic factors and government policies, leading to inflation and diminished confidence. In contrast, gold's limited supply and historical stability make it a reliable store of value, attracting investors during financial turbulence. As paper currencies continue to lose value, Macleod foresees a rise in gold's premium and purchasing power as people seek to safeguard their wealth from the uncertainties of fiat currencies. Let's get back to the interview.
In my view, with one new central bank created whose sole purpose is to issue and control the relationship between gold and credit of this new currency. This new currency will not be available to non-banks, if you like, probably not even available to banks in the direct sense, but credit based on it will be. So what you need to do is you need to ensure that there is a strong link between credit, which is created for the purpose of trade, most of which is self-extinguishing, by the way, and the top level of currency, which is firmly linked to gold. If you've got that, then your trade currency is simply the equivalent of gold. That is, I think, what will be proposed, or something similar to that will be proposed at the Brics meeting on the 22nd to the 24th of August. Now, since all the planning has already been done by Glaziev, whatever he comes up with will be almost a fait accompli. Now, the interesting thing, I mean, you referred to the press not covering this at all. I mean, goodness, it's almost as if there's what we call a D notice on it, which basically is the intelligence services say, thou must not publish this on pain of prosecution. But I think actually it's not so much a D notice, it's just complete ignorance of the importance of this situation. I mean, do bear in mind, for the last 52 years, we have had completely fiat currencies. No relationship between gold and fiat currencies. Gold, as far as our systems are concerned, is just a pet rock. And it's been stated as such by authoritative sources. So we don't understand the implications of this. I mean, as the establishment, by which I mean government, press, financial markets, none of them actually have grasped the importance of this. Why? Because everybody only understands fiat currencies, and they think that the dollar is money. But as we've discussed before, it is not. So that, I think, is why this has slipped through if you like, through the cracks in the floorboards. The difference between unsound money, which was the paper mark, and sound money, which was gold represented by the dollar, very starkly shown there in terms of what happens to the purchasing power of gold when the purchasing power of fiat currency really does collapse. So we're not even talking about that yet. We're only talking about a situation where, the purchasing power of fiat currency goes down while the purchasing power of gold remains relatively constant. Eventually, the collapse of our paper currencies bound to drive up the premium, if you like, in gold in terms of its purchasing power.
The increasing demand for gold by central banks in the Brics countries will likely continue. This is due to the perceived weakness of the US dollar and the desire to reduce dependence on the US dollar. As a result, the price of gold will continue to rise in the future. What are your thoughts on the interview? How do you think central banks' increasing demand for gold will impact the global financial system? Please share your thoughts in the comments section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.